Hey folks, Vic here with your weekly trade video for Friday, July the 15th, 2022. That is me on the left and my most handsome partner, Darko Ali, on the right. This was actually, I visited Darko in Sweden several times, but last one was 2019. And I thought I'd put this up because it's the summertime and sunny, and it's in the northern hemisphere, that is. So, yeah, great time, and hopefully I'll get back to see Darko soon back in Sweden. We've obviously the last few years have been a little bit difficult. All right, in this video I'm going to show you a trade that we use that can provide outstanding reward risk and very easy to see as well. In this case, over a 10-to-1 reward risk potential on this one, and I'll be quick to say that achieving those kinds of results totally depends on how you manage the trade, right? All I want to do in this video is show you how these trades set up, how we get into them for super small risk and big reward potential. And we'll get to that right now. So if you like this video, please give it a thumbs up. You know, we really appreciate it when you do that because it helps our YouTube algorithm, which helps us reach more traders and that kind of thing. And of course, be sure to subscribe to our channel by clicking the subscribe button in the lower right corner of the video. Okay, let's take a look. Okay, let's go through this and I'll show you how this trade set up. And it was on the British pound Australian dollar pair. Okay. The first thing we always need to do is make sure we're at a level that we want to be even thinking about trading at. And this black horizontal line is a daily level, what we call a significant neckline, because, or support or resistance, you can call it, because you look at all of these support here and here and here, and here's a closing price at that support. And then it drops. It breaks below it. When it comes back, what does it do? It holds and goes back again. So it's all support in here. It becomes resistance, resistance again on this day, again, amazing. And finally it breaks through and it becomes support. See this? Trades above it a little bit, you know, can't even get going above this high, and then it collapses again, comes back. What are we going to do here? Well, nothing. We want to see, is there any reason to take a trade? Is there any kind of a pattern? So at that daily level, if you go down to your 4-hour chart, and this black horizontal line is the same level. Now, you could adjust it up a little bit to the top of these significant necklines here, but it doesn't matter because what happened when price came up here, what we're doing is looking to see if there's any reason to take a trade. And when it hits it, it doesn't really do anything. And then it stalls in here. And you see this candle here? This is an ACAT right here, one of our ACAT patterns. And this is a at resistance on the higher time frames. That's a trade setup. And when we have a 1-hour pattern, okay, you have to know your time frame combinations. We would look at a 5-minute chart for getting into the trade. And if I go down to my 5-minute chart, we have very specific rules about how we like to get into the trades and that kind of thing. In this case here, the way I teach it anyway, I like to see the levels that I look at up here are up in this level here. The actual entry was at 126.23, and this is the move down, and it was huge. I mean, it was over 100 pips. Now listen, I want to be quick to say I am not saying you're going to get 100 pips out of this trade. If you're sitting there staring at a 5-minute chart and all this is going up and down, it can play on you psychologically. You can get shaken out of the trade. It starts to come back up here. You go, oh, I don't think I better get out of this trade. And then this happens and you miss the whole thing. And that, I mean, it's very common, especially when you're starting trading, to get shaken out like that. Don't worry about it. That takes experience, time at the controls. Because if you look at your higher time frames, like if I go to a 4-hour chart, for example, and I'm in this trade up in here, there's nothing to do, is there? Because it desensitizes you to all of that, up and down price movement that you see on a 5-minute chart. And it came down, and when we hit some really good logical levels, see this in here and here. But because we entered on a 1-hour chart, or the 1-hour chart, pardon me, was our setup time frame. Okay, you can look for levels on the way down here to take profit. And so these levels here, like there's a lot of the price held in here a lot, and there's no right or wrong on this, folks. Everybody does this differently. Your risk tolerance is different than somebody else's risk tolerance. Other people want to go for deeper retracements down into here, and that's why I say there's 100 pips, more than 100 pips of potential profit in this down to these levels, and you can see how it's bouncing as I'm recording this, right? But how you handle it and what your risk tolerance is going to be different from someone else. Okay, so I want to be clear about that. I don't want to mislead you into thinking, oh, everybody just got in this and made 100 pips. Yeah, some can do that, but not all. Okay. And listen, here's something important to know, really important. If you don't have a very big trading account, or maybe you just don't want to put much money into a trading account, this is definitely for you, because you can keep your account risk so small when you learn to trade at effective levels like this with very small pip risk. This needed a 10 pip risk, 10 pips, and it went up over 100 pips. Okay, so that's the nice thing about it. And one other thing, also very important, when you trade using this ACAT pattern, it is a fallacy to think that you need to be sitting at your computer all the time. You do not. Okay, you only need to look at your charts once every period that you're using. So for example, if you're trading daily ACATs, all right, you only have to look at your charts once a day. Okay, if you're trading 1 hour ACATs, like in our example, if I'm looking for this pattern, I'm only looking at it every hour. I'm not sitting there every 5 minutes looking to see if I have to wait for the candle to close every hour and see, hey, do I have a pattern or not? Okay, so that's really cuts things down. And even then, don't forget, we need to be at a key level of support resistance on our higher time frames, or there's nothing to talk about. So just understand that you do not need to be sitting and staring at your computer all day long with this kind of trading. So if you like this kind of trading where you don't need to put a lot of money into an account, and you don't really even need to be at your computer much, even though it is short-term trading, then give this some consideration. Try our service for a month or two or whatever. Learn the exact way to enter the trades for different time frame combinations, trade management protocols that we use, etc. Those are super important. And of course, our services include our chat rooms. Okay, and just see how it goes. We'd love to have you with us. Anyway, that is it for this week. Hope you have a great weekend. Thanks so much for listening in. Take care.